Do you want to make money from the stock market, but you don't have the time to day trade or to keep an eye on your trading every day? Well, you are not alone. Many people want to make money from the stock market, but they don't have the time to pay attention to what is going on the market. And today, I will show you an easy way that I use to make $3,000 to $5,000 every single month trading options. Hi, welcome to Ben Talks Money. My name is Ben. I have an MBA in finance and 8 years experience in trading. Today, I'll show you how you can easily and passively be enjoying a little portion of that pool through options trading. So this is how I do it. First of all, I look at the good companies, those mega tech companies that everybody looks at. Your NVIDIAs, your AMD, your Palantirs. And what I do is that I wait for a pullback in those stocks, usually due to some news or earnings or something like that, a macroeconomic event. There's usually every year you get about 4 or 5 events that draws down the stock market. Every single year, there is something like that. There's a macroeconomic event or geopolitical event that causes the stock market to drop down. Earlier this year, we saw it when the tariffs were first announced. The market dropped drastically. And right now, in a couple of months later, it's back at all-time highs, right? So that is your opportunity when it comes to the macroeconomic terms, the macroeconomic events. That's one way of the strategy. The other way is the earnings. Right now, last week when Amazon announced their earnings, their quarterly earnings, the stock just dropped. It dropped about 10%, and within a couple of days, it's back at all-time highs because the market is really hot. So what I do is that I wait for those drops. You don't have to chase anything. Don't chase the stock. Let it come to you. You watch on your chart and you see it's holding a support or it's holding, it's at a support level or a moving average or something like that. And usually those good names, and in a hot market like this, everybody is looking for opportunities to get in. People think, oh, it's too late to get in. Am I too late? I'm waiting for a pullback. As soon as there's a pullback, people get in. So what I do is that in the case of, let me use the Amazon as an example. In the case of the Amazon drop, as soon as it drops, you look at it and you buy options that expires in at least 6 months. I usually do within 6 to 1 year, right? So you buy those options. You put about $1,000, $2,000 down in those options. And within a couple of weeks or at least a month, the options will be up 100, 200%, right? And then what you do, you sell and you rinse and repeat. But by the time you sell, you already have another stock on your watch list. Right now, I have a number of them on my watch list. I have Salesforce, I have Accenture, I have HubSpot. Those 3 are the ones that I'm watching right now because earlier this week, they all hit their 52-week low. And what happens is that in a bullish market like this, there's usually a rotation. If you look at the IW, the Russell, the small cap ETF, is the only major index that is not hitting all-time high right now. And this week, we've seen a huge movement in the Russell, right? I bought the options in the IW, and right now they are performing really well. Some of them are about 100% right now. Some of them are about 50%. So that's how you do it. So in the case of CRM, Salesforce, it's a big company. The market cap is over 50 billion. Everybody looks at it. It's not going anywhere anytime soon. So I bought the options. I bought a $300 call options that expires next year, May. The reason that I bought an option a year of expiration is that I want to give myself time for it to work, right? But they have earnings coming up in the next 3 weeks. So I know for sure that there's definitely going to be movement in that stock going into earnings. And one thing is that when it's getting to earnings, the implied volatility of the options, they increase drastically. And with that increase alone in implied volatility, the option, you can get about 50% return when the implied volatility increases, right? And then again, you reduce your position, you sell, and you wait, and then you get another stock that has just pulled back, and you buy three, 6 months, or 1 year call option. And with this kind of strategy, you don't have to pay attention to it every day. You don't have to be actively trading every day. But at the end of the month, right, even if you don't make money in 1 month, the following month, you might double or triple your money. That's how this works, right? It's an easy way. It's stress-free. It's low risk because the stock has already pulled back. You are not chasing the stock, right? And your risk is very low because you are buying it at a support level. Once it breaks the support, you are out, right? In the case of Salesforce CRM, the support level right now is around $230. The stock is trading around 235. I got in around 233. So as soon as it breaks the 230 support, I'm out. You cut your losses and you are out. But the upside is so high because this stock was a $400 stock. And the thing with options is that if this stock moves from 230 to $300, you will make guaranteed 500% return. So that's how you make passive income, $3,000 to $5,000 every single month with options without having to day trade every day. So if you enjoyed this video, hit the like button and please subscribe to the channel and share for others to learn about this strategy, this simple option trading strategy. And I'll talk to you next time. Bye.